So we are live now. Yeah, good evening, folks. We'll start this in 2 minutes. Please let me know who all is joining. I can see Umesh and Pankaj on the comments. Please let me know who all is joining. I can see Umesh and Pankaj on the comments. Is there some echo?
Yeah, Alok, I think the YouTube video is also on, I believe. That's why we're hearing some echo. And folks, we also had some interesting, people joining in from interesting locations. So if you can also let me know about your location along with your name, that would be nice to see.
Okay.
A lot of questions from Umesh. Why have we stopped daily bites?
So we have not stopped daily bites, but there is a reorganization of different formats in which we are reporting this is happening. So meanwhile, we are placing the daily bite video on the Telegram channel, and in another couple of weeks we will essentially update on what formats we are using. So just bear with us for some more time, and uh, essentially the daily bite is on, but it is not just there on YouTube. That's about it. So you can watch it on the Telegram channel. Uh, Parikshit, you can put the Telegram channel link on the comment box, and whoever doesn't have it can be there. My request is that if you are subscribed to any weekend investing strategy, you must be on that Telegram channel. That's where we update in case there is any urgent updates that are required. So hi, Bajuri, Tanmay, Vaibhav, JKG, Ajay, Avis, Bomina, Kaushal. Welcome to all of you. Akash, uh, we will start in just a minute or so. Uh, we will keep the format of this monthly roundup similar to the last month, where I will discuss the trends of this month in the first 20 odd minutes, and then we'll open it up for Q&A for the next 20 minutes. So this is the format for today's live session. Uh, I can see people have logged in from a lot of parts of the country: Bangalore, Pune, Hyderabad, Mumbai, Bengaluru. I think we must also do a some sort of a locational grouping to see if we have enough people in different main cities, and then we can arrange some meets there. Uh,
Yeah.
we will do a meet uh, in Delhi probably sometime soon, and then we will have some more in other cities. Uh, Hi, Santosh, Bikram, Garvit, Bore Gowda. I hope I'm getting your name right. Rahul, Shiv Prasad, please send the Telegram link. Parikshit, please do
Yeah,
so.
I've
So let's
already
start.
sent the Telegram
Yeah,
link.
yeah,
Yeah.
yeah, yeah. So let's start now. I think uh, we have a good quorum. So let's start. So July was a good month, coming on the back of the rally that started from end of March. So you can see this is a Nifty chart since last 1.5 years or little more. And although we were sort of in a ranged market since October 2021, since March ending of 23, we have tried to break out of this range, which had topped at 18,400 couple of times, and then it also went to 18,800 in December 21. So this seemingly was a good sort of a move away from this congestion range that we've had, and of in the last 9 or 10 sessions we've given up some ground, but uh, so far that giving up of that ground is very very natural, coming on the back of a good run up from last week of June till mid of July. As you can see, this run up which happened from 18,500 to 20,000, so almost 1,500 points on the trot happened here, and then we have given about 700 points down, so about 50% of retracement on this move has happened, and we are very near this now support, and today that market has also taken that support and bounced from there. Where we go from here is of course uncertain, but it does seem like that we have corrected basis headwinds from overseas, and no specific internal change in terms of prospects of our market seem to have changed. So from that perspective, usually such external forces would likely be limited in terms of the extent of damage that they can do. I don't think there is so too much scope right now in pushing down, especially when there are all kinds of overweight ratings being updated for India. So Morgan Stanley has given overweight to India versus China. So more and more uh, foreign institutions and rating agencies and experts are looking at India in a more favorable manner. And if you see the timing of this all, this is virtually leading to the election in less than 9 months from now. And in all election years where the Umesh, we have not stopped the daily bites. We will, as I mentioned, it is there on the Telegram channel. We have not stopped it. So I'll just answer your query because
Also a
you put
quick
it
question. I
15,
mean,
20 times. Yeah.
why do I quickly point out that I've already sent you the link to the Telegram channel. If you will not be able to open it on the desktop, if you have not downloaded it on the mobile phone, so please download the Telegram app on the mobile phone and then paste that link on any chat in your Telegram. So I think you'll be able to access our channel from there, and the daily bites are hosted there.
Okay, so continuing with this, so essentially we have had a good rally of nearly 3,200 points, and we are correcting. I'm expecting that this correction should not go below this top that we had made at 18,800. So from that perspective, I mean, worst scenario for me right now is 18,800, but that is just speculation on my part, and we will just follow our non-discretionary approach uh, in doing this. So this is a monthly chart, and you can see that we've had 4 months on the trot. So you had April, May, June, and July, and usually you will see that whenever you have 4 or even 5 months of advances consecutively, you will have at least a month of sideways movement or a couple of months of down movement. So we are in that situation where some profit taking and some maybe consolidation is required by the market. Of course, on a very long term basis, on a yearly chart basis, nothing has gone wrong. The index is advancing very nicely for the eighth year in progression, and that of course has coincided with a lot of monetary inputs and the wider base of money printing that has been going around the last many years. So the trajectory has changed a bit from past years where it used to be not so directional, but now because there's so much of impetus from capital creation that the stock markets are running. And the prime example of this is the US market, where all commentators are talking about a recession, but the market is near the all-time high again. So I've always said that markets have a mind of their own, and a lot of times they can look very disoriented versus what the data is there on the ground. The data on the ground may be pointing to a recession, but the market is running ahead. You can either believe the data, or you can believe the price that is sort of forecasting the near future. uh, the uh, the usual sense that at least I have when I follow these price trends is that price is mostly right. And the way in the last couple of weeks also, the jobs data that has come out in the US, etc., has been extremely strong. So the economy is strong there, yet the interest rates are at a point where it should start hurting, but it hasn't. And very interestingly, I haven't brought that chart today here, but whenever the US markets have had a strong increase in yields, uh, India market has done very well. So in fact, let me just try to show you that. Let me just give me 1 minute. I'll fire up the. Uh, so let me stop the screen and present share screen. I'm sorry for this interruption, but I think it is important that I show you this. So we'll go to uh, US yields, and we'll make a, let's say, monthly chart on this. So if you see, I mean, US yields have been dropping last 30 years, and it's only since COVID that the trend has seemed to be changing. And we have, in fact, this major channel that we had for 3 decades, that has gotten broken. And now Bill Ackman and all the smart investors are saying that we are shorting the treasuries because yields are going up. So if I just superimpose this with Nifty, let me just superimpose it. This is Nifty, and I'll just put this here. So now if I see the major years where the US yield went up, there were these areas. And you will see that, you know for instance, from here, Nifty was 827, and by the time we hit the high here, it was 1267, almost a 40-50% jump. In this case, Nifty was 905 here, and by the time it reached here, it was 1500, another 50-60% jump. Here, Nifty was at 1000, and by the time we peaked here, it was 4200. So 4x sort of jump here. And here, you saw Nifty at 5200, and by the time we were here, we were at 10,000. So 2x jump here. And when this COVID bottom happened, Nifty was at 10,300, and we are currently at 19,300, almost a 2x jump here. So whenever US yield is rising sharply, Nifty is going up very sharply. I mean, this is fifth such, you can say, episode. Even if you sort of go into micro, you can use this. You can see that every time yield is rising rapidly, uh, US India market is doing very well. Now there may be some reasons for it, which we may or may not be able to, uh, you know. Exactly correlate it, but to my sense, it does mean that whenever US yields are rising, we probably are getting the benefit of liquidity coming out of US treasuries. So a lot of people are selling US treasuries when interest rates are rising, and that liquidity flow may be coming to emerging markets. The other explanation could be that interest rates are rising in the US when you are chasing, when the interest rates are chasing inflation, trying to curb inflation, and all risk on assets do very well at that time. So we are currently in a situation where uh, you know we are set up well for the markets to go up. So in a hike of interest rates, which um, you know conventionally, or it is counterintuitive to think about that, interest rates will go up so stock market will crash. I've shown you five periods where global interest rates went up, and possibly Indian interest rates were also going up, but the markets have rallied 50%, two times, four times, so on and so forth. So a lot of these narratives that we have, interest rate will go up, market will crash, all that doesn't seem to be working, in real life when you actually look at price trends. So from that perspective, I'm not bearish on the market at all. I think everything is in place that can be in place for India market, and some headwinds are there from time to time. But as we have seen, either we go sideways or we go upwards. There is right now at least no move towards the down on a overall basis. Small caps, which had rallied, almost 3x from the COVID bottom, uh, and even sort of doubling from pre-COVID level, had gone into a sideways sort of time correction in the last year and a half, since October 21 till April 23. And now that small cap market has taken off again to a new highs. And just see that despite Nifty being sort of stagnant or coming off in the last 2 weeks, there is hardly any blip on the small cap index. I mean, we've not even given up 1 week of gain on the small cap index, which kind of indicates the current strength in the small cap index. Similarly, is the case with with mid caps, where after consolidating and making this consolidation period at around 33,000, this 33,000 was taken out, and consistently with just 2 weeks of red candles, we have gone up dramatically after this. So these are strong signs that market is in strong hands, and currently no sign of a let up is happening. So any let up in strong markets are opportunities to look at, how to add more capital, how to add to more stronger sectors if you are doing discretionary, for example. The only sort of worry that is there is on the dollar index. It last 3 weeks it has been rising, and I think up to 104, 106 there will be no issue. But once, if it does cross 104, 106, then there will be a lot of concerns about uh, our currency going beyond 83, and then the crude oil impact, import bill impact also starts to come into play, but I'll not get into that. So overall, in terms of the benchmark and strategy performance, I'll very quickly go through this. So for the month of July, you had small caps do very well at 7.7%, the small cap 250 index, mid and small cap up by 6.3%, CNX 500 up by 3.8%, Nifty Next 50 up by 3.5%, CNX 200 up by 3.4%, and Nifty was up nearly 3%, 2.9%. In terms of weekend investing strategies, so MI50 clocked 12.2%. So this is another prime example of busting the myth that large number of stocks in your portfolio will not perform. This strategy has up to 50 stocks, I think about 50, 45 right now, and it has been performing beautifully, plus 12% on this. Uh, the 12% gain on MI35 and MI20. These two strategies, which we had launched about 2 years back, have also done extremely well. Both of them nearly 12% gain in this particular month. MI25 is also up 8.3%. MI30 is up 7.8%. MI all cap up 7.6%. ATH2 up 6.5%. ATH 6.1%. NNF10 4.3%, slightly better than Nifty Next 50, but yeah, I mean not great shakes. MI Evergreen at 3.8%, slightly better than CNX 200, but just about there. And India top 10 not doing so well at 1.6% versus 2.9% here. In terms of sectoral trends, Nifty commodities almost made a new high but is hanging there. So I think this is sort of just at the cusp of some breakout here, and July has seen it consolidate its position more, but the breakout has not yet happened. Real estate really did well, but as soon as we hit a double top here, there has been a fall in real CNX real estate, mainly because of selling in the DLF stocks. I think once we are able to take out this high, then maybe a new leg up like this can happen on top there. Metals also very near their all-time highs, so just needs a bit of a nudge maybe from the Chinese market to conquer this. But metals also looking quite good. Autos have taken some rest for the last 3-4 weeks. We haven't gained in in July as such on autos. So autos are taking some rest. FMCG also taking some rest. We are actually down from end of June in FMCG. I think some major announcements that had to happen in ITC and other stocks have taken their toll in terms of that. Public sector enterprise stocks doing extremely well, gaining nicely in this 1 month. So I think this is very, very strong. Energy is still not yet near their previous high, but it has broken out of this consolidation and trend line. So the month has been good, and hopefully it can perform better. Pharma is the sort of the darling of July. You can see that all 4 weeks in the green, and today also it has closed uh, in terms of the previous highs at a new high. So if you see a very long term chart of pharma, you will see that there are, in the last 13 or 14 years, we've had three major runs. One in 2000, I think 14 to 15, then one in 2021, and then the third leg is starting from here. So if you have structured system, you will not be caught for all those lull periods of time. Nifty IT is extremely dull. It is caught in this sideways range. I don't think we are going up on this anytime soon. The sectoral performance chart is here in terms of the July returns. You can see media sector did very well, PSU banks did very well, public sector enterprise did very well. Pharma has done extremely well at 10%. Metals have done nearly 8%. Real estate energy also doing quite well. In terms of this heat map of sectors, you can see that media stocks have really come back up very, very fast. But pharma is at number 2 on a monthly, or number 3 on a 3 monthly basis. And you also have PSU banks doing quite well. And real estate has remained in the top, but giving up the leadership here somewhat. So metals, pharma, PSU banks, and media stocks, these have hogged the limelight in the last 1 month or so. Spotlight is on MIATH2. Last 6 months, this strategy has started to come back strongly. We've got about 31% gain in the last 6 months versus 14%. The first 1 year when we started MIATH2, we had a really bad performance, and that seems to be turning around, and now the strategy is doing quite well. In the last 1 year also, it has done very well at 42% versus 23% on CNX 500. So ATH2, if you have ATH2, keep your faith in the strategy, because not all strategies perform on every year basis. There are cycles within their performance also, and we have seen several times that many strategies not performing or outperforming the benchmark for for 1 year or 2 year, but then in the next 2 years they really outperform. So switching from one underperforming strategy to the other outperforming strategy may not always work, because it is not that all strategies can outperform every year or every period that we take up. So I have taken 25 minutes of the time, more than five more than promised. But we will now open for Q&A, and you can put your questions in the comment box, and I will take them up one by one. Uh, So the first question is from Akash Srivastav. How to calculate the effective returns, including subscription fees, brokerage charges? Is there any calculator already? So small case has a calculator which will include all the charges, even subscription fees, and I think not the and the broker charges also. But what I think they will not include is the dividends. The dividends are not included in the final performance figures. What I have always been saying is that you must bring in capital which does not make your expense ratio high. So if there's a strategy which is for, let's say, 7,000 rupees a year, try to keep the expense ratio not more than 1%. So essentially look forward, that over a period of time, maybe not in the first year, but maybe in 2 years, 3 years, you go beyond 7 lakhs on that strategy, so that your expense ratio continues to come down. Brokerage part is more or less, I would say, it gets counterweighted by the dividends that are not accounted for in the strategies. And uh, while 70 or 80% of the folks are already on low broker platforms, some of you are not. So I would request, over time, if you can shift to low brokerage platforms, that will be beneficial to your accounts. JKG says minimum time frame for any strategy, 3 years or 5 years. So 4 5 years is something that we think is should be a minimum, you know, runway that you look for at least. Money that may be required in 1 year or 2 year ideally should not come into equity market, because markets can be, not can be a not so doing well every year. You can have 2 3 years also of a slump at times, although in the last 7 8 years we have not seen that. But yes, I mean, very short term money, 1 2 year type of money should not be put to the market. But yes, 4 5 years is something where at least you are reasonably confident that you will see a good cycle within that time frame.
We can also point out, Alok, that while it is very natural for anyone to enter a strategy, looking at its good performance in the recent times, it's always the real deal is in sticking to the strategy for long term, right? So, when as he clearly said, there could be a couple of dull years as well as soon as you enter. It can happen anytime, but
Yeah,
yeah.
yeah, yeah. Rahul says India top 10 is consistently underperforming subscribers since inception. So India top 10 has underperformed this year. I agree with you. We have done rigorous testing on this strategy before launching it. So I see no reason that in due course, in its lifetime, it will continue to behave that way. If I see the last 7 8 years of its back test also, there were a couple of years where it underperformed, and unfortunately this has been an underperforming year for that strategy. But I remain hopeful that in the coming years it will pick up and make up for this current shortfall. Data Speak says, can we compare XIRR and CAGR of two investing strategies? What values of XIRR are considered good? So if you can compare CAGR and XIR of two investing strategies, for sure. In fact, we have a tool on our website, uh, where you can go and compare one strategy versus the other, and it will tell you the overall returns and drawdowns. Uh,
I think
XIRR
it's
is, yeah. Go ahead, Precious.
so. What I was trying to say is that, I think it's fair to compare XRR and CAGR as long as your capital addition has been, equally spaced out, and there is no, there is no
Uh, Parikshit, I lost you.
Can you hear me now?
Yes, I can hear you now.
So there have been cases we have seen in the past where people have added capital at irregular periods, and the amount of capital added into the strategy is also quite different, right? So I mean, as long as your capital addition is that the frequency of addition is equally spaced out, and your additions are the sum of the money added is also almost equal. I think you can compare it. Otherwise, it doesn't make sense.
Akash says my 35 is giving good results. It is small cap strategy. It could go down very quickly as well. Yes, small cap strategies can go down rapidly also, but the experience is that it all works in a stepped up fashion. So you make gains and then you lose some, and then you make gains and then you lose some. That's how most of the strategies will work. How long is again, one or two cycles if you are able to play out in any particular subset of the market. I think that will set you up for a reasonable cushion in your returns, so that you can feel comfortable about it. So we tend to look at 4 to 5 years as sort of the minimum thing that you should stay around with. uh, Dr. Maurya says, I've subscribed to MI20 and I've put 2.25 lakhs for past 20 days. Please guide how to increase SIP in this. So you can gradually SIP into it, maybe on a monthly basis, or if you want, you can do it on a quarterly basis also. But I would want you to, see it as a long-term vehicle. Just 20 days is basically very, very small amount of time. The strategy has been on for nearly 2 years now, but go ahead and look at it for many years basis. Uh, Sai says few strategies does rebalance weekly, which often involves frequent trades. How do you manage the transaction cost and tax implications that occur? So none of the strategies really have a very high churn. Even if you look at weekly strategies, which will be the, I think, MI20 or MI35 probably have the most amount of transactions. But even there, if you will see, it may be like three times, 2 to 3 times in a year is the churn. And if you are using a low cost broker, that transaction cost will not be significant actually. So the idea is that we have to optimize between low churn versus returns also. So if we keep the rebalance a bit loose and allow more space for stocks to go up and down, there will be less churn, but you'll possibly have deeper drawdowns in some stocks also. So it is a sort of an optimization that has been done already, and the results are at the end of it, in front of you. The transaction cost, if you are using a low cost broker, will not change your results by any significant margin, especially when you will include some dividends, etc., into that. uh, Garvit says, is momentum strategy applicable just in stock markets? Any areas of life where we can apply it? So this is, I think, more uh, a question of psychological makeup. So if you were to sort of apply this, I mean, I have applied it in my life, that go with the flow, and just don't keep hopping from one thing to the other. Like, a lot of people have this habit of, I'll do this activity, but I'll do this also, and I'll do that also. So I don't do that, and I try to remain focused in one direction and just go with the flow in that direction. That is how momentum has been applicable to me. But in terms of financial products, beyond stock markets, you can use momentum in various other asset classes also. There is a very classical dual momentum strategy by Gary Antonacci, who used it on a world ETF, gold, and debt fund. So three funds he used, and he basically was invested in any two of them which were performing at any one point of time, and he beat, I think, S&P 500 over a period of time, something like that. So it can be used beyond stock markets also. Uh, I'm looking for a question where. So Santosh has a question on gold. Gold lately seems to be stagnated. What is your view? So I think gold is a very long-term cycle. So I think gold is going to go up for several years uh, here on. So a few months of stagnation doesn't bother me on this. We have come out of a long bear cycle from 2013 till 2016 17, when we had a jump to near 60,000, and now we are consolidating at 60,000. I am very confident. Maybe I am biased because I do hold gold and I promote gold, but I feel that this 11% CAGR that we've had for last 50 years, of course it is not uniformly distributed. I think that is not going anywhere. So if you, even if you get a couple of dull years, you will make up in due course of time, because gold is real money actually. I mean, everything else is just not that. So if there is inflation in the world, gold will make up for it sooner or later. Just that it will not happen like a Excel sheet every week or every month. Uh, Please share this PPT separately. Okay, we will do that. Telegram channel. Parikshit, please make sure that we share this.
Sure, sure.
Uh,
Noted.
Mukund has a question. Can you please weighted average system what small case providing, and also how does it affect a monthly SIP in long term? I think he means about the weighted average uh, pricing that small case takes. So any transaction that we do, let's say we rebalance and you have to buy ITC on Monday. So small case algorithm will take the open, high, low, and close of Monday, and do a weighted average, basically an average of that, and assume that as your buy or sell price. You may buy at 10 o'clock, but the weighted average may be lower than that or higher than that. So that's how the weighted average system of small case works. And over 20, 50, 100 transactions, you will buy some transactions above weighted average, you will buy some transactions below weighted average, you will sell some transactions above weighted average, you will sell some transactions below weighted average. Overall, I think it will not make any difference to your result versus what is being assumed at the small case level. Santosh has another question. Any update on talking about weekend strategies in daily bites? It is useful to compare our returns versus model portfolio. Hub also doesn't seem to be having this. So we update all statistics daily on the Weekend Investing Hub. You should be able to get that that index of each strategy there. Also, the small case microsite weekendinvesting.smallcase.com, I think by 8 p.m. or by 10 p.m. gets updated. So the chart and the downloadable Excel sheet on a daily basis, day record basis, is available from there. And very soon we will make some changes where you will be able to see this more easily on a daily basis. So your feedback is noted, and we'll definitely work on that. Uh, Let me take some more queries which are not general discussion in nature. uh, okay. In this we have covered. I'm sorry, I'll not take any queries on specific stocks. uh, uh, so investors with less amount, uh, where your expense ratio goes high, I will not recommend. uh, if you even come into MI50, MI20, which is our lowest priced strategy, I would still recommend that you have the runway to build it up to 5 lakhs, so that you can have a 1% expense ratio. We have the NG 50/50 strategy, which is also, it's a double digit returns strategy, which is a free strategy that can be followed. But for very low amounts, I would not recommend these products. So, can I book my MI Evergreen strategy partially? Is Vikas's question. So, there is a facility in small case where you can partially exit your small case. So, you can use that facility. When you go into your app or the desktop, it'll give you an option of partial exit. If you're not able to find it, just contact us. We will show you a video how to do it. Partial exit will make sure that if, let's say, you have 5 7 lakhs invested, you want to draw 1 lakhs, it'll proportionately sell off those stocks for the amount that you do. uh, Varun says, what do you think of having a system that allows us to book profits and reinvest? Can be a great approach. So it is possible to do this. You can add a layer of your own rules on top of these strategies. So whenever you find that maybe your strategy, if you are plotting it on Excel, and you find that it is breaking down below some moving average, you can sell some. If it goes above some moving average, you can buy some. You could do that. I i i usually don't recommend it, because it takes away from the otherwise simplicity of this 2 minute investing. You don't want to put so much mind behind it, that by itself, if some decent results are coming, that then maybe there's no need to tinker with it. But if you are, let's say, a full time person in the markets and you want to improvise on it, you can even back test. You can take all the data that we have for all strategies and put some overlay on that and see if it works for you. The next one is also from Varun. Can we sell our locked up gold jewelry? I don't think your partner will like that. And invest in gold ETF. What do you suggest? So, I think if you already have physical, don't get rid of it. If you are going to buy some physical and you have an option of going to gold, then go for it. But if you already have the physical, maybe just keep that. Uh, Uh, cool. Rachit says, I love your small case strategy. Thank you very much. Me and my wife are using your strategies from 2020. What do you suggest for profit booking? Currently, we have NNF10 and MI35. So again, as I said, we really don't have a profit booking mechanism uh, within the strategy that we book out and sit out. But the only time then that the strategies will go to cash in, and actually you have both rotational strategies, so they will not go to cash, but they will go into defensive stocks whenever markets start to fall. So my usually sense is that without trying to time the market, whenever you need money in your life to improvise your lifestyle or your need or your goal, you should take some money off. Not worry too much about where exactly you want to take it off. That's sort of my very loose sort of response to this. Prashad says, I'm investor in MIMT or small case. What is the max limit we can invest, and how can we sell portions in a year to gain tax advantage of 1 lakh? So the recommended limits are there on Weekend Investing Hub as well as Weekend Investing microsite. I think for MIMT small case it is 15 to 20 lakhs. You can sell a portion of your small case if you go through your purchases and you see that some of your purchases which are in loss, usually the lost ones would have already been rebalanced out, so you would have some accumulated loss. What you could do if you really want to do tax harvesting is look at the stocks which are uh, which have gained very recently, and you may want to book those ahead of 31st March and then buy them back, so that you have booked some profit in that year, which will set off your losses also, which anyways would be carried forward. So unless there is any compulsion, you don't want to do so much tinkering, but because you may lose some long term advantage on some stocks. But if you really want to take advantage of this 1 lakh uh, portion, then just look at stocks which have gained in the very recent times, and sell them and buy them back again. You could use that facility. Uh, Next one is from Kalpak. Uh, should I invest around 50 lakhs lump sum by August and want to invest in small and mid caps mostly? So my usual suggestion is don't go lump sum into any strategy, because markets are nobody's nobody can really pinpoint where tops and bottoms will get made. So if August end is a top for the next 4 months, you will be in a really painful situation. So bring your money in gradually. Yes, you may lose out if this bull run continues till December. You may lose out by not bringing in the lump sum game, but then you have to decide whether you want to play conservative or aggressive. If you are an aggressive investor, then yes, you could go ahead with that. I probably would never do that. Uh, Next one is from Achyutam Rai. Maximum amount to invest in MI20, and also if I want to stay invested in just in this strategy is a good idea. Yes, MI20 is a very good strategy to follow. Mid and small cap, both sectors get covered here. You may want to add some large cap strategy at some later date. Maximum amount, again, as I said, you can refer to the weekend investing microsite or the hub for that. I don't recall, but I think it is about 10 lakhs. Uh, Kunal says, if I add monthly SIPs, is it fine to exceed your outer limit for that strategy? So the limits have been set for your benefit, so that slippages don't happen in those strategies. Uh, a bit here or there does not matter, but I would not recommend you to go too far beyond that. It may be better to diversify into other strategies also once your amount goes up dramatically. Pankaj says, is investing all that I save in course of next 5 years in MI 2035 viable? I don't need to pull it out. Yes, it is very much viable, no doubt about it. Prasad says, is invest. No, I haven't got the question. Is it a good idea to invest in more than one momentum strategy? Or should I go with other strategies to diversify? So I think you can go with more than one momentum strategy. A lot of our users use two or three on an average, and they've all had very good experience of sometimes one strategy is not performing and the other one is pitching in. And I, for instance, don't use any other strategy other than momentum for myself also. So because momentum strategies also take care of you when markets are down, and usually what is seen is that one style, if you are pursuing, and then you have another bucket which is pursuing another style, when times really are in distress, you will really get very bothered, where which one to follow now, which one to give up, where to add money. So I would say that if you have seen the experience, when we've been doing this for 7 years now, so if you see that over a period of time things are all right, then why try to you know go beyond too much of diversification in style also. uh, Mukund says, can you do a same monthly roundup for stairs also? Yeah, so we do some roundups of stairs. We've not been very regular on that, but we will do a quarterly roundup on stairs very, very soon.
So we have been doing monthly roundup videos, but we've not done any live videos yet. We've been
So we
regularly
can plan
putting
that.
up videos. Yeah.
Gaurav says you once said something has changed in the market and the market dynamics in the last few years. So, see, on a very macro basis, nothing has changed. The things that have changed are, very short term in nature. So, like algorithms are in there in the market. So, the nature of day movement may change, or how much transactions may happen within a very short period of time may change. But because we are using time frames of weekly, monthly, I don't think there is much of change in terms of that context. So, I mean, we have not changed the rules of any momentum strategy in the last 10 years because we think the same can continue to work. Achyutam has another question, and I think we'll extend this for another few minutes. We had promised you 45 minutes, but we're now at 50. We'll take is the MI20 small case purely based on a technical analysis, or is it decisions which making decisions which we feel may not be right? Sometimes why we buy stocks or we recommend rebalance stocks where I am not sure about those stocks, but I remove myself from that decision, of course. So there is no question of any human intervention in all this. All that we do, either in stairs or in weekend investing, there is no human intervention. Also, do you consider value proposition of the stocks? So we don't do any value analysis, but we check for red flags. Any stock that has been flagged up by the exchange or by SEBI, or it does not fit the market cap filter, or it does not fit the average volume filter. All that is taken care of, but we don't get into the actual valuation of the stock. Kalpak has question: how many stocks in 50 lakhs, and also how should I divide and how many installments? So I really cannot say how you should divide this money, but I would think go with a couple of strategies, maybe one mid and small cap strategy, one large cap strategy, and go equal weight in both of them, and I hope you can do the best out of that. Apart from MIMT small case, which momentum small case do you recommend for monthly SIP of 1 lakh? So I think you could look at MI20, MI35, MITH2 also, all doing quite well. You could look at these strategies. Shiv Prasad says, can we use momentum strategy as a swing trade on a monthly basis? So while it is not intended to be so, some people subscribe to us, don't invest in those strategies, but just watch those trades. So if MI20 has 20 stocks, so that is their watch list, and then they're adding their own intelligence on top of it and trading them, maybe even pyramiding up on them. So many people who have talked to me have told me, not many, some have talked and said that we don't invest as per what you say about weightages, but we look at the stocks that are picked up by your filters, and then we do our own game. That is also okay. uh, Shiv Prasad says, what are your thoughts on quarterly rebalance momentum? Transaction charges are less and returns are also similar. So it depends. Large caps, you could do quarterly rebalance. In large caps, we have mostly monthly rebalance, like MI Evergreen, we have an NF10, we have top 10. But in small caps, quarterly it will be a disaster when the small caps really go down, and it can be extremely delayed. Just imagine that this entire run, April, May, June, may have got lost because the quarterly rebalance would not have picked the runners till 1st of July. So, I mean, quarterly rebalance is possible for long term strategies, mostly in large cap names. Transaction costs, I don't think, are so material that for that we should give up the frequency of the transaction. So I have the last question now from Garvit Maheshwari. Markets have much before the interest rates have started reducing. So as I mentioned and showed you, markets are running up along with rise of interest rate also. So when we are getting a tailwind out of rising interest rates, and when the interest rates turn, then emerging market tailwind will also come. So I think we are set for a good run up in the next year or two, and I think let's hope for the best and wish ourselves the best luck for the next year or two. And I think the election result and the election year is also crucial. So far, I mean, if I have to guess, I think we are looking at continuation of the current regime. In that sense, there is no discontinuity, and that may also give a huge fillip in 2024, if whenever that result comes out, if it comes that way. So last one, Srideep, for strategy like MI28 incurs good amount in other credit and debit which bring down the total return. So I don't understand the question. You can send us your question on email. We'll take it up. But the total returns don't come down or anything. So this is the end of session. I am sorry if I missed any question or any query. You can send us on email if I missed it. But it's very nice that we had so many people stay on till the end, and we will hope to continue doing this every month. If there is meanwhile any query, any doubt, anything that you want to discuss or ask, always feel free to send us email. We are always available on email. We are reasonably prompt in replying back also. So all the best to you and best wishes and good luck.
Thank you, everyone.
Thank you. Bye bye. Parikshit, you can post the Telegram link again, I think. Okay. Bye.